Hey guys, welcome back to another video. In this video we are going to be discussing break of structure. What is break of structure? And we're going to give examples, indicators, and how to use break of structure to trade the forex market. If you want to watch more of these videos, please don't forget to hit the like button, subscribe, and leave your thoughts in the comment section. If you're new to our channel, please also check us out on Telegram and on TikTok, as we do videos every single day on psychology and on how to trade the forex market properly. So break of structure, the basic definition means a shift in market structure that signal a potential reversal or change in trend. So this is a key concept in price action trading and is commonly used in the context of smart money concepts. Now, before we go deep into break of structure, we need to understand what is structure in the first place, and it's all coming from the concept of market structure. Now, if you don't know what's the market structure, you cannot understand break of structure, because it will just be another jargon or another ICT or SMC jargon. The first thing you have to know is that the market has three structures. It has an uptrend, it has a downtrend, and it has a sideways trend. Now, in the case of an uptrend, we probably know that market will keep forming a high, it goes and forms a low, a high, a low, a high, a low, a high, a low. We call this a higher high, higher low, higher high, higher low. That is how the market moves in an uptrend. Now, in the case of a downtrend, let me remove this thing, please. In the case of a downtrend, market will form a lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high. That is the case of a downtrend. Then for the sideways trend, I think you know that already. It's just moving between a resistance and support. Now, when you know about these things, right, you know that okay, if the market is moving in a downtrend, it will keep forming lower lows and lower highs. If it's moving an uptrend, it will keep forming higher highs and higher lows. For the break of structure, is simply the break of the current market structure. I already gave you guys a definition, but let me explain it further. Let me make it very easy for you people. It's simply the break of the current market structure or the existing market structure. Now, if the market is moving in an uptrend, right, it will go up like that and it will go to the downside, right? In this case here, the market has formed a high over here, what you call a higher high, right? We call this one a higher high, and it will go down to form a low, which is called a higher low, right? So this is what you call the resistance, and this one, if it goes back to the upside, is what you call a support, right? Yes. So when price will go and form a resistance, it will come down here and form a support like this. Now, in this case here, we are in a downtrend, right? The market is selling from this high over here and going to this particular low. That means that what? If the market does not go and touch this other area here, then it reverses and goes back to the upside, we will have a break of structure. It means that what? It is breaking its current downtrend, right? So the simple definition of break of structure is breaking the current downtrend, right? Meanwhile, we are in an uptrend. So in the case of an uptrend, like what I just explained to you people that for an uptrend we keep having higher highs and higher lows. It means that each time you see price move in a let's say goes to the downside and form a retracement and move back to the upside and break the previous resistance, is what you call a break of structure. So when price goes to the upside and breaks the previous resistance, right, is what you call a break of structure. It's what you call a bullish break of structure. Now let me give a template. Let me use a template for that. That's it there. So BOS is mostly written as BOS for those who are drawing those things on their chart. BOS, yes. So we have BOS, we have chalk, which is what you call change of character. In the next video I will talk about change of character, but for now let's focus on break of structure. So if we're in a bullish trend, we'll keep having bullish break of structure. So you see like that. Each time price breaks the resistance, is what you call a break of structure. It breaks the resistance, is what you call a break of structure, and it breaks the next resistance, is what you call a break of structure. Now this is a case of a bullish break of structure. Now in the case of a downtrend, is quite the opposite of what I just did right now. So if we're in a downtrend, it's gonna be the opposite, right? So we'll have market will be moving back to the downside, right? When it goes back to the upside, we have a reversal. But if price comes and breaks the previous support area here, we are having what we call a break of structure, because it's breaking the current market structure or the existing market structure, which was a uptrend, right? When it breaks and it breaks it to the downside, so what we're having is what we call a break of structure, and we call this one a bearish break of structure. There's a bullish, which I just spoke about, and there's a bearish. Okay, so in the bearish case, we'll have like that, right? Each time price breaks the support level is what we call a break of structure. So this is the first case here, second case here, and the third case over here. So each time you see price break the previous support is what we call a break of structure. Now this is the case of a downtrend. How will this help us to trade in the forex market? Now let me go now to the live market examples, and let me show you guys an indicator that you can use to get this break of structure. Let me delete everything first. Now this is the live market. This is what you call gold, and we can look at gold in the 1 hour time frame. Come to the 1 hour time frame like this. Okay, so this is gold, right? And what do we see here? Gold is currently right now, gold is in an uptrend in this particular area like this. That's from here all the way to this area. Gold is in an uptrend, it's moving to the upside, right? So each time you see gold do an impulsive move to the upside, we call it a higher high, right? When it goes back to form the correction move, it's called a higher low, right? Then at the next time that it breaks the previous high, is what you call a break of structure, right? Now if you want to use an indicator to draw those things on your chart, this is what you're going to do. You come to indicators list, right, and you will select the indicator that you want to use. So I'll always prefer that you use Smart Money Concepts by luxalgo, because you can really have all those things input in there. You have break of structure, you have change of character, and you have the rest. Okay, we're going to go through each and every one of those particular stuffs, okay, but you have to use Smart Money Concepts by luxalgo. So I'll just click, that's it there. You see the very first one, you see Smart Money Concepts by luxalgo. It has about 55,000 users, so you can just click on it like that and it's going to appear on your charts. Okay, just like that. You see that over here we have break of structure, you can see. So we have the BOS over here, and you keep seeing those BOS. Each time you see price breaks a resistance, you keep seeing the BOS, right? Then you have change of character also, so you have to know what's the change of character. That's why you have to watch the next video, because I'll talk about change of character. Now if I have to do it by my own self and I don't really need to use an indicator, I have to first of all identify my trend. So I'll put it like this. Okay, we're beginning from here and we're going all the way to this particular area like this. Okay, this is my current outlook, right? So price moves to the upside, it forms a high, right? So that's a high. I'll come to horizontal line and I'll click the text BOS, right? And I'll align it to the middle and to the center. That means that what, each time price breaks that BOS, I'll have a break of structure. After a while, what happens? Price breaks the structure, right? It breaks to the upside and even forms a new high, right, before it goes back to the downside. Now I can keep duplicating this particular stuff by just pressing clone, and I'll just be moving. Whenever I see a resistance to the upside, I'll just click my line over there, and when I see price breaks past the resistance, it means we're having a break of structure. Now how do I use this to trade? Because I can keep putting this BOS like this, like this, like this, like this, but now how do we use that to trade? Now the first thing is that as a trader, you have to identify the trend. You know that one of the laws of trading is that you want to trade with the trend. So if the market is in an uptrend, you want to trade in an uptrend. You want to keep buying, not selling. Once I know that, okay, market is going to go in an uptrend, right? And I want to buy gold. What do? I'll just keep the BOS like this. I'll mark the high, right? Once as I see the first break of structure and I see that price goes back to the downside and reverses back to the upside, that means that what I'm in an uptrend. It's already clean and clear that I'm in an uptrend. So what do I do now? Once I see price will go back to the reversal, right, I'll have to be able to note some few things, which I will teach you guys as the videos are coming, because over here we have an order block. Once I know that price is in an uptrend, right, what do? I have to put my area of interest. Now over here we have an order block. In this case here we have an order block over here, right, a bullish order block. So once I see price break structure, I know that what price may likely go back and retest the order block, or maybe the fair value gap, before it reverses back to the upside. So what do? I'll mark this area as my buy zone and I'll put my buying entry. The moment I see a confirmation in the lower time frame, I'll put a buy trade like this and I'll put my SL below this previous low like this. I'll give it some room to breathe, so my SL can be around it like this, and I'll put my entry like that and maybe target either this area as my TP1, or maybe at this or this particular area like this, because that was where we had the previous high. You see, so that's how we caught one particular trade on gold using just break of structure. So let's go to the next trade. In this other case here, let me look for a downtrend. Okay, in this case here we're in a downtrend on the 1 hour time frame. This is the high over here, then we keep having price moving to the downside. Now in this case here, I'll start by marking my zones of interest. In a downtrend, I'll know, okay, fine, this is my order block over here, which I have to mark out first. Then price sold to the downside, right? Then we had a break of structure, right? That means that what when price sold to the downside like that, it created a first resistance area. And what happened when price moved to the upside, it retraced to the upside, and we had an impulsive move that break price to the downside. Now once we see that happen, we know that we are in a downtrend, right? And we know that what price will keep forming a correction move to the upside. Meanwhile, the main impulsive move will be to the downside. So what do? We have to map out our zones of interest. So now once I see the first break of structure, there's a high chance that price may go back to the upside to test a particular zone before going back to the downside. Now over here we have a bearish order block. The price goes back for the correction move, it taps that same order block, and what do we see? We see an evening star formation, right? We see a doji candle, a bullish candle, then we have another bearish candle again. So that's already a strong confirmation for a sell trade. Now I'll just take my sell trade like that, my short position like that, put my stop loss above this area like that, and maybe target this low or maybe this other low over here. That's a 4:1 risk to reward ratio. Now I'm giving you guys a very simple and easy trading strategy without too much of complication, without too much of drama. Just simply break of structure, trend trading. Once you know that we're in a downtrend, we look for an order block, or we look for a fair value gap. When price goes and enter that particular area, we take our trade quietly and we sit and watch what happens. So that's how we trade with the break of structure, only as a strategy. So with that said, that is all for this particular video. And what do you think about this particular video? I'll leave your thoughts in the comment section and tell me what you want us to do next, because we're going to be doing the entire series of ICT concepts. We have about 15 to 20 concepts that we have to dissect, and hopefully people will be able to get adequate knowledge on trading with the ICT concepts. So with that said, thanks for watching. God bless you.